How to pay off debt with a low income is the topic of today's video. Well, the first thing I would recommend is to know the numbers. Exactly down to the penny, how much do you owe? You would be surprised how many times people have asked me for help, financial help, and when I ask them how much do you owe, they don't even know. They don't even know how much they owe on their car, their credit cards. And so the number one thing I would recommend is down to the penny, you need to know exactly how much you're paying in interest and what the total amount is. If you've ever heard of Dave Ramsey, this is going to sound very familiar. But the second thing I would recommend is to do a budget. Okay? Now, this is regarding, now do the budget with the money that you take home. Okay? Not with the money that you make before taxes. So let's say that before taxes you make $60,000 and after taxes you actually bring home $48,000. That would mean you bring home $4,000 a month. Okay? That's the number that we're going to use for the budget. Dave Ramsey recommends that you stop all investing and all deductions when you're getting out of debt. Now, a lot of people say, well, I'm getting a match where I work and I don't want to stop investing. That's fine. If you don't want to stop investing, just make sure that you focus and you throw everything you've got towards a debt. Now, the first thing you need to do is save $1,000. Okay? This is going to serve as your little emergency fund. If anything is to go wrong, instead of using a credit card, instead of going to the pawn shop, instead of going to payday lending, you have a $1,000 saved just for emergencies. Now, this money is not to be used for anything else. Okay? A trip to wherever is not an emergency. I bought this online because I needed to is not an emergency. Okay? Christmas is always in December, like Dave Ramsey says. So, these are not emergencies. This money that we're talking about is to be set aside exactly for that. Things that you cannot foresee and circumstances that would otherwise lead you to getting more into debt. Okay, so after you've saved your first $1,000, the next thing you need to do is list your debt smallest to largest. We're going to start with the smallest debt. This is called the debt snowball. If you need more information on this, be sure to check Dave Ramsey's book, The Total Money Makeover. After we've listed all of your debts, we'll say $1,000 for credit cards, $2,000 for a medical bill, $10,000 for a truck, and $50,000 for student loans. After we've listed all your debts from smallest to largest, we're going to begin working on the smallest debt first. Yes, it would make more sense, mathematically speaking, to begin attacking the debts with the highest interest rates. The only problem is that oftentimes those debts are large amounts. We're talking about car payments, we're talking about student loans. And sometimes if you owe $20,000, $25,000 on your car, for instance, it might take you a year or two to pay that off. And it's very easy to lose track of what you're doing if in 2 years you don't see any progress, you don't see like you've paid anything. It's very easy to get discouraged and want to move on to something else and instead of paying off the debt. So what Dave Ramsey recommends would be to start with the smallest debts first. That way, the $1,000 credit card, the $2,000 medical bill. That way, when you pay that off, you get a sense of accomplishment. You literally paid off one of your debts. That triggers you to move on to the next one. The money that you were throwing at that debt, and we're going to be talking about that in a little bit, is going to be thrown at the next $2,000 medical bill, and so forth. Now, what I want you to do is, before you do anything else, before you spend any money at the beginning of the month, you need to do the budget. We'll use my example. I bring home about $4,000 every month. Okay, after my fixed expenses. What are fixed expenses? We're talking about things like rent, a mortgage payment, a property insurance, property taxes. Those payments are fixed. They usually don't change month to month. Okay, so after you and your wife, you and your spouse sit down and say, okay, we have $2,000 worth of fixed expenses and we bring home $4,000 every month. That leaves us $2,000 to play with. $2,000 for groceries, $2,000 for gas, $2,000 for X, Y, and Z, right? That's why you need to do a budget. Before you spend the money, you need to tell it what to do instead of wonder where it went. All right, so we've got $4,000 in our example, and we're using $2,000 for set expenses, like rent, like a mortgage payment. After that, you need to set aside money to eat. If you're getting out of debt, you should not be going out to eat to a restaurant or to a bar, because that would be known as a luxury. That's not a necessity. Yes, you need to eat, but you don't need to eat sushi every night. If you are learning anything at all from my video, please give it a subscribe, give it a like. That way I know that you're finding some value in my videos, please. All right, so we've listed all of our take-home pay, and we know how much we have to pay every month in fixed expenses. Then the rest of the money that is not going to a fixed expense we've allocated because you and your spouse have sat down together and you've decided this is what we're going to spend on groceries, this is what we're going to spend on gas, this is what we're going to spend on X, Y, and Z. Only you know what kind of bills you have every month. But typically, it's going to take about 3 months of you messing with the numbers so that you get it right. The first time you might think that $400 is enough for groceries, and you might, at the end of the month, you might realize that no, you need $800. Whatever. Fix the numbers so that by the second or third month, you're actually spending what you and your spouse agreed on. Okay? The purpose, the point of this whole thing is not to be limiting. I'm not saying that a budget should limit your income. On the other hand, a budget should tell the money what to do, and then once you've created the budget tells you what to do. Okay? All right, so once you've listed all your debts, smallest to largest, and once you've allocated all your money in the budget into every category, then we're going to start paying off aggressively on the smallest debt you have. After you and your spouse agreed on the fixed expenses every month, after you and your spouse agreed what to do with the remaining of the money for gas, groceries, expenses that are ongoing but they're not fixed every month. You don't always spend the same amount on groceries month to month. It might be a similar number, but it's not always exact. It's not like your mortgage payment, which is always exact to the penny. So once you've done that, once you've agreed on that, the rest needs to go towards the debt. Now, here's the thing though. Before the beginning of the month, before you make all those payments and spend all that money, you already know how much you're spending, how much you're paying towards the debt. So take that money and throw it at the debt before you start spending all that money. If you leave it until the end of the month, there's a very high chance you're going to spend it on something else. That's why I'm telling you, if you do the budget on the money that you bring home after taxes, you should know more or less, actually you should know fairly well how much you're going to throw towards the debt. If you have this number before the beginning of the month, let's say May 1st, May 2nd, May 3rd, take that money and put it towards debt. If you don't do that and you wait until the 27th, the 28th, the 29th to do so, you might spend it because it's already the end of the month and we have 30 days to go out and spend on anything. Now, let me talk about my numbers. In 3 years, making $50,000 as a bartender, I paid off all my debts and I saved a $50,000 emergency fund. So I'm debt free and I have $50,000 cash in the bank. And that's me making $50,000 a year. I'm not making 200, I'm not making 150, I'm not even making 100. I'm only making 50,000. So if I can do it, so can you.